Hello everyone, my name is Laura, and on behalf of the Colorado Department of Revenue, welcome to our November 2023 Income and Withholding Legislative Changes webinar recording. Thank you for taking the time to learn more about recent legislative updates and how to be voluntarily tax compliant. You can pause and replay this video at any time to review the information provided. Let's go ahead and get started. In today's webinar, we'll cover the 12 income and withholding tax bills that have relevant changes for the current or upcoming tax years. The bills we'll be covering today include House Bill 23-1277, Reporting Adjustments to Taxable Income, House Bill 23-1006, Employer Notice of Income Tax Credits, House Bill 23-1272, Tax Policy that Advances Decarbonization, Senate Bill 2251, Policies to Reduce Emissions from Built Environment, House Bill 22-1121, Repeal of Infrequently Used Tax Expenditures, House Bill 23-1311, Identical Temporary Tabor Refund, House Bill 22-1083, Colorado Homeless Contribution Income Tax Credit, House Bill 22-1310, 529 Account Apprenticeship Expenses, Senate Bill 2316, Greenhouse Gas Reduction, House Bill 22-1026, Alternative Transportation Options Tax Credit, House Bill 22-1320, Achieving a Better Life Experience, ABLE Savings Accounts, and House Bill 22-1414, Healthy Meals for All Public School Students. While these are not all of the bills passed in this legislative session, we are focusing on bills that will have the most impact on Colorado taxpayers. Some bills that we'll be covering have impacts on both sales tax and income tax, so while this webinar focuses on income and withholding tax, we will mention sales tax for these bills that have multiple impacts. Upon completion of this webinar, you should have a better understanding of current and upcoming income and wage withholding tax legislative changes and know how to navigate resources and tools that are available to you. Our motto is to always help, and our mission is to promote voluntary compliance with tax laws through education, assistance, and customer service. When it comes to helping you be voluntarily tax compliant, we are always happy to help. There are a wide variety of resources and tools at your disposal, including our websites, tax.colorado.gov and Revenue Online, the Taxpayer Helpline. You can schedule an appointment with a tax examiner at one of our local offices, which are located in Colorado Springs, Denver Metro, Fort Collins, Grand Junction, and Pueblo. All of our local offices are now open to the public via walk-in or by appointment, and each of our locations also have drop-off boxes if you need to drop off a form. We also have the department's FYIs and guidance publications and our taxpayer email. Let's begin today's webinar by highlighting the department's family of websites. The department's family of websites includes Your Colorado Life, which stands for Links and Information for Everyone. This educational website provides Colorado residents with information on several topics varying from the history of taxes to starting a business. We also have our main website, tax.colorado.gov, and Revenue Online, which is an administration portal that you can use to make payments, file returns, find sales and use tax rates, and locate other helpful links for your account. All of these websites are great resources that provide a wealth of information if you ever have a question or need assistance. I'd also like to take a moment to highlight a few other places where you can keep up to date on what the department is doing. On LinkedIn, our YouTube channel, which has tutorials and walkthroughs, Facebook, and on Instagram, which has weekly tax tips, reminders, and helpful hints to make being voluntarily tax compliant so much easier. Now we'll discuss recent legislation changes and how they may impact you. The first bill we'll cover today is House Bill 23-1277, Reporting Adjustments to Taxable Income. House Bill 23-1277 makes three major changes. The first applies specifically with respect to non-resident owners. Pass-through entities currently have three options for satisfying the obligations of non-resident owners. The pass-through entity may file a composite return on behalf of these non-resident owners. The pass-through entity may withhold an estimated tax payment. The pass-through entity may collect and file an agreement that the owner will file on a separate return. House Bill 23-1277 consolidates these options so that there are now two options. The pass-through entity may file a composite return that includes the withholding option. The bill also clarifies the calculation of the required payment. With this option, pass-through entities can now satisfy the filing and payment obligations of non-resident owners with one return and one payment. The non-resident owners may still opt out of the composite return and can file a separate return claiming their share of the composite payment if necessary. The second major change that House Bill 23-1277 makes is to restore the 1-month lag between the federal income tax return deadlines and Colorado's income tax deadlines for C corporations. Prior to 2017, the federal income tax return deadline for C corporations was March 15th, but Congress moved the federal due date for C corporations to April 15th in 2017. This bill updates Colorado's due date to 1 month after the federal due date, so May 15th, with an extension deadline of November 15th. This change in the due date applies to tax years beginning on or after January 1st, 2024, and will not apply to tax year 2023 returns that must be filed in 2024. The third major change enacted by House Bill 23-1277 is to replace the current statutes for reporting federal adjustments with a model statute developed by the Multi-State Tax Commission that allows for additional time for reporting adjustments and allows pass-through entities to handle adjustments at the entity level on behalf of their owners. To date, 14 states have adopted legislation compatible with this model. Next, we'll discuss House Bill 23-1006, Employer Notice of Income Tax Credits. House Bill 23-1006 requires employers, particularly employers who must withhold from employee pay, to notify their employees in writing annually that the employee may be eligible for federal and state tax credits, including the Earned Income Tax Credit, EITC, and the Child Tax Credit, CTC. The notice must be provided in writing to employees by January 31st, 2024, and by January 31st of each year thereafter, which is the same deadline as providing W-2s to employees. The Department of Revenue has published a model notice to help employers comply and represent credit information accurately. This model is called the DR 995 Notice of Federal and State Refundable Tax Credits and can be found on the department website under the Forms tab. We'll now turn our attention to House Bill 23-1272, Tax Policy that Advances Decarbonization. House Bill 23-1272 creates several credits to accelerate the adoption of clean energy technologies. This bill increased innovative motor vehicle credits effective July 1st, 2023, but also disallowed credits for vehicles with a manufacturer's suggested retail price, or MSRP, over $80,000. Additional credits will be allowed beginning in 2024 for qualifying motor vehicles with an MSRP under $35,000 and for credits that are assigned to a financing entity or motor vehicle dealer. What else is changing? The bill increases innovative truck credits beginning in 2024. Also beginning in 2024, the bill allows both credits to be assigned to the motor vehicle dealer. Previously, these could only be assigned to the financing entity. And beginning in 2025, a financing entity or motor vehicle dealer that accepts assignments of the credit may request advance payment of the assigned credits on a quarterly basis. House Bill 23-1272 also creates new refundable income tax credits, which will be available beginning January 1st, 2024. Areas impacted by House Bill 23-1272 include, but are not limited to, industrial clean energy, geothermal energy projects, production of geothermal electricity generation, heat pump technology, retail sales of electric bicycles, and construction of sustainable aviation fuel production facilities. I'd like to point out that the heat pump credit will replace the credit that is available in 2023. Lastly, beginning in 2024, this bill changes the calculation of the ad valorem credit for severance tax. Be on the lookout for several other changes that this bill will bring in 2024. We'll now take a look at Senate Bill 2251, Policies to Reduce Emissions from Built Environment. This bill covers both income tax and sales tax, so we'll discuss both in this presentation since there is some overlap. This bill will have several changes after 2023, so I'd like to remind you of our webpage for environmentally friendly tax credits. This webpage can be located from our homepage, tax.colorado.gov, and by selecting the button under the Climate Friendly Tax Incentives banner. Senate Bill 2251 also makes several different changes to income tax and sales tax codes. This bill created an income tax credit for heat pump systems and heat pump water heaters. It is for tax year 2023, and the credit is equal to 10% of the purchase price paid by the purchaser. This tax credit is only available in tax year 2023, and that's because House Bill 23-1272 made a new version of this credit that is going to be available to the sellers of heat pumps in 2024. To learn more about House Bill 23-1272, you can visit our climate-friendly tax incentives webpage. I'd like to point out some helpful information regarding this bill because how the credits are assigned matters. For example, if I purchase a heat pump system to use in my home and I don't assign the credit to the seller, that is a non-refundable income tax credit on my tax return. However, if I purchase a heat pump system to use in my home and I do assign the credit to the seller, then the credit is refundable on the seller's income tax return. This bill created a second income tax credit, and that is for the installation of residential energy storage systems in 2023 and 2024 income tax years. Energy storage systems are defined as any commercially available, customer-sited system, including batteries and the batteries paired with on-site generation, that is capable of retaining, storing, and delivering energy by chemical, thermal, mechanical, or other means. This tax credit is equal to 10% of the purchase price paid by the purchaser. Senate Bill 2251 also created 3 sales and use tax exemptions, which are as follows. The first one is for eligible decarbonizing building materials on or after July 1st, 2024 through June 30th, 2034. The Office of the State Architect will be developing a list of materials that qualify, so be on the lookout for that information. There is also a sales and use tax exemption for heat pump systems and heat pump water heaters on and after January 1st, 2023 through December 31st, 2023. Lastly is the sales and use tax exemption for residential energy storage systems on and after July 1st, 2023 through December 31st, 2032. As portions of this bill become applicable in the coming year, the Office of State Architect will be a great resource to visit if you would like more information regarding this topic. The Office of State Architect's website is osa.colorado.gov, and their email address is dpa_statebuildings@state.co.us. Another important piece of information regarding this bill is that there are 2 new forms for reporting credit assignments. The first form is the DR 1307 Residential Energy Storage System Credit Eligibility Certification and Assignment Election. This form includes information on eligibility to claim this credit, system requirements, option to assign the credit to the seller, and instructions to submit the form. The second form is DR 1322 Heat Pump System or Heat Pump Water Heater Eligibility Certification and Assignment Election. This form includes information on eligibility to claim this credit, system requirements, installation requirements, options to assign this credit to the seller, and submission instructions. Both of these forms are available on tax.colorado.gov under the Forms tab. Next, we'll cover House Bill 23-1121, Repeal of Infrequently Used Tax Expenditures. House Bill 23-1121 repeals 10 infrequently used tax expenditures, most of which are related to oil shale severance tax. While forms may be affected by this change in tax year 2024, very few taxpayers will be impacted. Please pay careful attention to line items when completing severance tax forms to make sure that you do not make any mistakes. These forms rarely change, and no one has claimed the items being sunset in over 20 years. So aside from the changes to and removal of some forms, this will have a minimal impact on taxpayers. House Bill 23-1311 was dependent on the passing of Proposition HH. Since Proposition HH did not pass, we will not be covering it in today's webinar recording. Next is House Bill 22-1083, Colorado Homeless Contribution Income Tax Credit. House Bill 22-1083 creates an income tax credit against monetary or in-kind donations made directly to a nonprofit organization or capital campaign fundraiser which works towards solving homelessness. Examples of qualifying services include rehabilitation centers, transitional housing, temporary homeless shelters, domestic violence shelters, homelessness prevention services, case management services for the unhoused, and others. The credit allowed is equal to 25% of the contribution or 30% of the contribution made in an underserved rural county and cannot exceed $100,000 per taxpayer per year. Only one taxpayer on a joint return may claim this credit. Taxpayers can request a credit certificate from the approved nonprofit that they contribute to in order to verify this income tax credit. Monetary and in-kind donations must be equal to or greater than $100 to qualify for the income tax credit. Now we'll cover House Bill 22-1310, 529 Account Apprenticeship Expenses. House Bill 22-1310 broadens the definition of qualified higher education expenses, to which funds from a 529 savings account can apply to conform with federal definitions. 529 savings can now be applied to the cost of fees, books, supplies, and equipment required for participation in apprenticeship programs. The Colorado Department of Labor and Employment website, apprenticeship.colorado.gov, provides additional information on qualifying apprenticeships. Next, we'll discuss Senate Bill 2316, Greenhouse Gas Reduction. This bill covers both income tax and sales tax, so we'll discuss both in this presentation since there is some overlap. Senate Bill 2316 creates a refundable income tax credit for qualified retailers of electric-powered lawn equipment. The purpose of this bill is to incentivize the purchase and use of electric lawn equipment to replace comparable gas-powered equipment and reduce greenhouse gas emissions. This credit will be available for tax years 2024, 2025, and 2026. What can retailers expect from this bill? As a qualifying retailer, you are eligible for a tax credit equal to 33% of the purchase price for all retail sales of new electric lawn equipment sold in Colorado during the tax year. You must pre-register with the department to confirm your eligibility before making sales that would qualify for the credit. And you must report your sales to the department on a quarterly basis. This credit will be claimed on tax returns for retailers making sales of qualifying equipment. Qualifying electric-powered lawn equipment includes lawnmowers, leaf blowers, trimmers, or snow blowers. There is only one way for a retailer to register as a qualified retailer, and that is by using Revenue Online. The steps a retailer will take to register are to log in to their Revenue Online account, locate the income tax section, locate the account box, select additional actions, and in that section, you'll see the option to register as a qualified retailer. Once the department receives this information, the retailer will then receive a letter indicating the status of their registration. As a retailer, the credit will be claimed on your tax return. 3% of the purchase price may be kept by the retailer as an administrative fee. The remaining 30% must be deducted from the sales price, stated separately on the receipt or invoice, and provided as a discount against the purchase price for the customer. What might a consumer expect when purchasing a qualifying product? You may see a markdown of 30% of the purchase price at the time of purchase if you are buying from a participating retailer. Next, we'll cover House Bill 22-1026, Alternative Transportation Options Tax Credit. House Bill 22-1026 replaces an existing income tax deduction for expenses incurred by employers when providing alternative transportation options to employees. Please note that this is a state House bill and is separate legislation from any city incentives provided for alternative transportation. For example, the e-bike and e-cargo bike rebate vouchers in Denver. House Bill 22-1026 states that employers may be eligible for a refundable income tax credit if they incur costs to provide alternative transportation options to employees. Alternative transportation options include prearranged rides and partial or fully paid mass transit passes, bike shares or bike rentals, scooter rides, or ride-sharing agreements. Employers may claim a credit of 50% of the total amount spent to provide alternative transportation options to employees. The maximum amount that may be claimed in any income tax year is $125,000 and $1,000 per employee. In order to claim this credit, an employer must first submit the Form DR 1323 Annual Employer Plan Report to the department with their plan to offer alternative transportation options. This form can be found under the Forms tab on our homepage, tax.colorado.gov. Now, we'll take a look at House Bill 22-1320, Achieving a Better Life Experience, ABLE Savings Accounts. The ABLE Savings Accounts Bill supports individuals with intellectual and physical disabilities. House Bill 22-1320 makes it so that the ABLE account owner does not also have to be the beneficiary of the account. An ABLE savings account can be opened in your name and distributed on behalf of a disabled loved one. This individual must also be the designated beneficiary of the account, and the funds that are withdrawn must be used for the expenses related to that designated beneficiary's disability. I'd also like to mention that there is a per beneficiary limitation, and the aggregate of contributions made to both a 529 and ABLE program accounts for the same beneficiary are subject to that limitation. So what's changed? Qualifying taxpayers can claim a subtraction on their Colorado income tax returns for qualifying contributions made to an ABLE account by Colorado ABLE. Eligible taxpayers include individuals, estates, and trusts. The new subtraction can be claimed on the Form DR 104AD Individual Income Tax Subtraction Schedule or Form DR 105 Fiduciary Income Tax Return. This subtraction is valid for income tax years 2023 to 2025 and is not allowed for contributions made to ABLE accounts administered in another state. These forms can be found under the Forms tab on tax.colorado.gov. Next, we're serving up House Bill 22-1414, Healthy Meals for All Public School Students. This bill provides free school meals to all Colorado children attending public schools. Parents and guardians of school-aged children may already have noticed the impact of this bill. This bill creates several new changes that I'd like to highlight. Beginning in 2023, there is a new deduction cap for individual taxpayers whose federal AGI is greater than $300,000. An add-back is required for taxpayers with AGIs over $300,000, regardless of whether they claimed itemized deductions or the standard deduction on their federal return. The cap is $12,000 for a single filer and $16,000 for joint filers. This deduction cap supports healthy meals for all public school students. How does this differ from previous years? In 2022, the AGI was $400,000 and only applied to taxpayers claiming itemized deductions. Additionally, the deduction caps were $30,000 for single filers and $60,000 for married filing jointly, respectively. Let's take a moment to look at how the deduction cap works. If your federal deductions exceed these caps and you exceed the income thresholds, you must add back that amount to your Colorado return to be included as additional income subject to Colorado income tax. The additional tax collected on the income that must be added back is diverted to fund the Healthy Meals for All Public School Students program. The instructions for the DR 104 Colorado Individual Income Tax Form, which are typically found in the instruction booklet, will provide line-by-line instructions for how to add back any additional income that becomes subject to Colorado income tax based on this bill. The next legislative update impacting income tax that we'll discuss is commonly referred to as the SALT Parity Act and is composed of House Bill 21-1327, State and Local Tax Parity Act for Businesses, and Senate Bill 22-124, SALT Parity Act. These bills have their own dedicated webinars and recordings and will not be covered completely in this presentation. However, we would like to share helpful resources for these bills. The most complete resource available for the SALT Parity Act is the SALT Parity Act election website. To get to the SALT Parity Act election website, start at tax.colorado.gov, hover over or select Businesses from the blue menu bar, then select Business Income Tax. On the Business Income Tax landing page, scroll down below the banner and you'll see several menu panels. Select the menu panel titled SALT Parity Act Election to get to the SALT Parity Act landing page. To access this website directly, you can also type in tax.colorado.gov/SALT-parity-act-election into your web browser. This page will continue to be updated regularly throughout the periods covered by the SALT Parity Act, which is currently 2018 through 2025. As you may know, Governor Polis called a special session for the legislature after Proposition HH did not pass in November's election. There are two main items affecting taxation that resulted from that special session. The first one we'll discuss is Senate Bill 23B-003, Identical Temporary TABOR Refund. Senate Bill 23B-003 passed during the special legislative session on November 20th, 2023. This bill changes the TABOR refund structure for income tax year 2023. The standard method for these TABOR refunds is to use a 6-tiered structure based on the taxpayer's federal adjusted gross income, or AGI. However, this bill establishes a flat TABOR refund for all qualifying Coloradans. The refund is $800 for one qualifying taxpayer, or $1,600 for two qualifying taxpayers filing jointly, regardless of the taxpayer's federal adjusted gross income, or AGI. In order to qualify for this state sales tax refund, you must meet the eligibility criteria. The first eligibility criteria is that you must file an income tax return for the tax year 2023 on which you claim the state sales tax refund. If you were at least 18 years old when the tax year began, file a 2023 DR 104 Colorado Individual Income Tax Return by April 15, 2024, even if you do not have a Colorado income tax liability or are not claiming a refund of W-2 wage withholding. Or if you have a Colorado income tax liability or claim a refund of W-2 wage withholding, you can file a 2023 DR 104 Colorado Individual Income Tax Return by October 15, 2024. Certain qualifying residents may also file a 2023 Property Tax Rent Heat PTC rebate application by April 15, 2024 in lieu of filing an income tax return. Please be advised that there are very specific criteria to qualify for the PTC rebate. More information on this rebate and its qualifications can be found on our website at tax.colorado.gov/PTC-rebate. In the special legislative session, the legislature passed House Bill 23B-1002, Increased Earned Income Tax Credit 2023, on November 21, 2023. Under previous law, EITC was going to be 25% of what you were or would have been eligible for at the federal level, but with this bill, the state EITC amount will increase to 50% of that federal amount. The extra 25% will be funded by the TABOR surplus, but this increased EITC will not have the filing deadlines that the regular state sales tax refund does. So, qualifying taxpayers will be eligible for this tax credit within the standard statute of limitations. The forms impacted by this change will be the DR 104CR and the DR 104TN. Please note that this increase was only passed for tax year 2023, so income tax years commencing on or after January 1st, 2023, but before January 1st, 2024. For income tax year 2023, whose filing period will open in just a couple of months, we'd like to share a few reminders with you. The Colorado state income tax rate for tax year 2023 is 4.4%. Updated forms to file for tax year 2023 will be published on our website tax.colorado.gov, and they will be available in paper form at our local service centers. If you are not located near a service center, you can request that a copy of the individual income tax booklet be mailed to you by contacting our taxpayer helpline at 303-238-7378. I'd also like to take a moment to highlight where you can find additional information for individual income tax. On our website, hover over Individuals and then select Individual Income Tax. You can also go directly to the webpage by entering tax.colorado.gov/individual-income-tax in your browser. This page covers a variety of topics, including refunds, payment options, filing information, and Colorado income tax credits. I'd also like to point out where you can find additional information on filing income taxes for businesses, since there have been some changes based on the legislation. On our website, hover over Businesses and then select Business Income Tax. You can also go directly to the webpage by entering tax.colorado.gov/business-income-tax in your browser. This page covers a variety of topics, including filing requirements, information for C corporations, partnership and S corporations, due dates, and resources. And finally, I'd like to highlight where you can find additional information on withholding Colorado tax. On our website, hover over Businesses and then select Withholding Tax. You can go directly to the webpage by entering tax.colorado.gov/withholding-tax in your browser. This page covers filing information, additional withholding information, like how to add third-party access to accounts, and resources for filing withholding. There are a wide variety of resources and tools at your disposal to help you be voluntarily tax compliant. We have our websites, the taxpayer helpline. You can schedule an appointment with a tax examiner at one of our local offices, which are located in Colorado Springs, Denver Metro, Fort Collins, Grand Junction, and Pueblo. All of our local offices are now open to the public via walk-in or by appointment, and each of our locations also have drop-off boxes if you need to drop off a form. We also have the department's FYIs and guidance publications and our taxpayer email. The tax rates used in this recording are for illustration purposes, and tax rates are subject to change over time. Again, my name is Laura, and I'd like to thank you for your kind attention and for taking time out of your day to join us. I hope I gave you a clearer picture of how to be voluntarily tax compliant. It was my pleasure to serve you. Thank you.